Market Sniper, and we're going to talk about the oil market. Quick update for you all on that. So you may recall this is a macro falling wedge. This is post the Greenspan pump creation and dump creation. We were in a stable period here between, I say stable, $35 and $10 over most of the 90s, stemming right back from the 80s. In terms of the oil market, we then had this rising wedge, which was a type 3 rising wedge that led to an absolute blow off. This was post the dot-com. The liquidity that was provided by Alan Greenspan, surely someone that must answer for his economic crimes against his peers, indeed. Then we had essentially a 3 impulse falling wedge. I've covered this in many vids a number of times, so I'm going to skip quite quickly through this. There's your impulse 1. Go a little bit fatter. Impulse 2 was squeezy there. We had the Ukraine crisis, and despite that and the prospect of possible war between Russia, Ukraine, America and all of that, it never happened, of course. We ended up with that huge seller that was really vast July, and we were in the low hundreds, already suggesting people should be getting short on that as a structure that was going to sell off. It sold off and actually took out, to everybody's shock and horror, the subprime lows. Anyway, we had a reflation period, not super convincing, but up you went. You started to broaden there a little bit, and down you went again. That selling off period into the weakness of 2019. Then over here, at this point, essentially the economy is not particularly strong. And then we had our crisis, our, what do we call it, pandemic crisis. Let's stay with that. That took with WTI right into there. And since then, we've been in a reflation. We're expecting inflation to come through. There it goes. So this was a break of the rising wedge, and this has seen us be positioned as inflationists. In other words, we're expecting the trade actually is fiat currency devaluation worldwide. Costs across the board for everything going up. This is on account of money being provided to billionaires that initially pumped asset prices up, like the stock market and various other items. And more recently, since some money has found its way into retail hands, we're seeing a shortage, supply chain constraints helped by the pandemic, and also just costs, the devaluation of money. Everything's going up. Well, everything is not going up. The tokens created by a central bank that you are utilizing to pay for things are losing value because they created 25% of all dollars ever created since the beginning of America in a single year. That's right. So what's happened now? Well, we actually had a slight period of counter trend here. And you must recall, we feigned and broke the falling wedge. Then we broke it properly. And we had what's typically referred to as a return move to the wedge. That's it. That was your return move to the wedge. Everybody, that's it for the oil bull. That's this. We are long again on WTI and have been for a couple of days now. And that is post the return move to the wedge. I'm expecting the inflation agenda to reassert quite strongly. I'm also expecting at some point between now and next year that in fact there will be a need for further stimulus as the strength of the economy starts to lag. And despite that, pricing will not reduce on staples. You will still see stubbornly high coffee, copper, and many other staples prices remain in spite of a weak economy. So what have we had? Well, we've kind of had one clear impulse. We had a rally, we had a secondary, bit of a grind there, and then a spill down. It is possible you get one more selling leg. It is possible, but our bias is that we will be reflacing largely. So you could be slightly early into this trade, have your stops certainly in terms of that. But if you're early by one more sell-off. So far you've had, I would argue, you've come close to 3. You had your first slap, you had a very steep sell-off, and you've sold off again there, which each had 2 legs to it. Might argue that each one of these is like one big selling leg, and that you get one more dip, but I would be surprised if this ran the low, and if it did only just, and then I think we'd be away at the races. I'm going to stick my neck out and say I'm slightly off that probability being too strong, and I actually expect oil to potentially have made its final low on the return move to the falling wedge. As I've mentioned, moderate chance of a marginally lower low on one more two-legger sell. Moderate chance, but I would bias to the bull side. So what does that mean? It means reflation. It means reflation of the oil price. Yeah, it means you're going to be paying more. You're going to get a little bit of tired here, I suspect. A little bit of tired. It's not going to be runaway train. This is not a shriek, get in now, pay any level of price. Remember, limit orders are your friend. It's best to plan and plot an entry. So as I said, there was quite a steep grind there that you were trying to hold and you sold off. This structural area in and around the 3.6s is very significant. It does seem so. Just run, and then again just run, and then the spiller, the thriller, all the way down to 62, and now you're coming back up to the 3.6s, and you'll probably have a little bit of pushback and pullback, and many will think, oh, that's it, we're done for. You might get an A, B, C, and then a D leg. You might be able to get it in and around the 64s. But overall, I don't think that changes the fact that we're probably saying, yeah, you're done for the bottoms. So you want to start looking for bull bias and limit orders to position for the upside in the oil markets. That's our take. Is it any different for the likes of Brent and other oil related? Let's have a look at that. Very, very similar chart structure. Interestingly enough, the falling wedge we can view in a logarithmic. Let's just see how it shows up on the logarithmic scale when we go back up. The way I've drawn it, it doesn't quite work. I'd need to redraw. That was our short call from up top there and from up top there. So that was 2014 and that was 2020. And now where are we? Let's just get the text out of the way there a little bit. Put it in there. Yeah, you're very, very close to a key level, the 70 level. This is a very influential level. You've pushed past it, you've returned back into the wedge, and you're back at the 70 level. I would expect here as well, you've seen a bit of a buying wick coming halfway back up, that overall you're going to probably start to see, we might be a tad early, you're probably going to see some degree of bottoming. You might sell off one more time, part of the way back down, but you're going to start to see some bottoming and the beginning move up. So you are at or close to being at what we think are localized lows for the oil complex. By the way, we are in and we are vested, so our interests are that we have PAA, which is a pipeline stock company. We are expecting a $16 target off from this one. We've been long from around the 9s. It's at 9. It's done a round trip. It's made its second interim and pulled back. We think some form of basing will start to occur. If you have a look at this time frame, it's weekly. It's a spinning top, so it's very, very calm. It's slowing down on this down leg. We think this would turn around, reassert, and that you'll eventually at some point make our 16.37 target. So you have plenty of time for that to occur. We did trade this to the short side in the big oil sell-off from over here, and we took in early entries up top here at the $25, $26 level, and we traded all the way down to the $3.20 level, which was made as a target. So now, in fact, we're calling for the movement to the upside. The stocks have actually languished a bit behind the commodity. This, of course, is pipeline, not an oil play. You can look at Tullow and others for more direct oil plays involving the commodity itself, but the pipeline companies should do reasonably well and pull up with this. They're not going to push ice cream in replacement through those pipes. So I think oil's resurgence, supply chain resistance. Of course, you had a rival that was affected by the Bitcoin ransomware narrative. good luck with all of that and sorting out the truth behind that story. But I think we'll see some upside start to build, or some basing. It's kind of early. You'll note that it's kind of early. We prefer to be early. We don't mind getting in once, twice, even 3 times, and being a touch early with tight stops, because then once you get the run right, you're in, and some of the best moves come quite early. Okay, thanks for watching. You're watching the Market Sniper. Remember, you can grab the free mini series below. You can book a call through our website. Only use the website. You can chat to someone just like you. Building wealth in reset times, massive currency devaluation. How do you ensure you make money? And by the way, having money in the bank is not a safe thing. It's going backwards. I'm expecting debt jubilees and haircuts and bailouts. You need to have your funds invested in a manner that will be making you money in reset times. And some of the best places will be trading the commodities, investing in the commodities, trading the commodity equities, and investing in the commodity equities. Also see our Crypto Sniper channel for the opportunities that are existing there as well. Thanks for watching. Catch you later. All the best, and shares are appreciated.